As the first quarter of 2025 wraps up, Nigeria's equities market has delivered a mixed performance marked by fluctuations in investor sentiment. After a strong February, which saw a month-to-date return of plus 3.2% and a year-to-date gain of plus 4.8%, the market reversed course in March, closing the month down by 1.99%. Despite this decline, the year-to-date return remains positive at plus 2.67%, highlighting some resilience amid sectoral weakness. Joining me to unpack this is Chinazom Izuora, Senior Investment Broker at Parthian Securities. Hello, Chinazom. Thank you for joining me today.
Thank you for having me. Good morning.
All right, Chinazom, March witnessed a pullback. We saw the month-to-date return printing minus 1.99%. You might want to call that minus 2%. Did you expect this, or at what point did you sort of realize the month would end this way?
Actually, when we've been looking at activities on the market and also trying to compare it with what happened last year, we were actually expecting some form of correction or pullback. We were actually expecting to see it in February, but then the main pullback happened in March. It's always expected when you see a lot of securities gaining significantly because you expect profit taking. Especially traders are going to take profit on their positions once those securities reach a certain level. In addition to that, we also expected to see a pullback in the banking sector in light of the recapitalization. From the beginning of this year, we started hearing news of allotment and listing of those public and primary offer rights issue shares. You can imagine that a lot of those companies are significantly higher than their public offer or rights price. So it's expected that the investors that are getting credited with those units are going to want to take profit. So we've seen that especially in the banking sector. In most of the month of March, there was bearish sentiment on the back of corporate actions and dividend announcements. Like we always say, the market is information driven, and in periods where there isn't a lot of information being released to the market, you tend to see very weak sentiment and very low trading volumes across board.
Right. I'd like us to take a look at sector performance. You started it already, talking about the fact that you expected pullback from some sectors, and one of them is banking, which is down 0.49%. Insurance is also down 2.48%. Oil and gas, 4.02%. Consumer goods shared 1.30%, and then industrial goods, close to oil and gas, 3.59%. We see, just like you said, banking remains the best performing here, but we cannot say the same for oil and gas and industrial goods. What do you think happened, and do you see that changing in April?
So we know so far a lot of the movements we've seen, especially this end of March, has been driven by corporate actions. One of the things that is perhaps will explain why we didn't see as much movement in the industrial goods and the consumer goods sector, because there's also been dividend announcements in industrial goods. For example, Dangsem has announced their dividends. We've also seen dividend announcements in Lafarge. We've seen NASCON. We've even seen some securities that have already passed their qualification date or have already started making their dividend payments. But one thing we saw with the industrial goods sector is that a lot of the qualification data is still far out. We're seeing qualification data as far as May, June, and payment data as far out as July, August. So in those kind of situations, you'll have investors that are going to wait to closer to those qualification times to enter those securities to take advantage of those dividend declarations. In the oil and gas sector, there's been a lot of negative or mixed sentiment. There's been concerns about whether or not the international oil price is going to fall in light of geopolitical tensions and tariffs from the US. There's been a lot of mixed signals with the oil and gas sector. Another consideration when you talk about the industrial goods and the oil and gas sector, we have a lot of high cap securities in those sectors, and we know that high cap stocks tend to be less liquid than the smaller cap and medium cap stocks. So that's also a factor that affects them. and especially when they declare their dividends being high cap stocks and the dividend yield on those securities is significantly slower than what you would find in the banking and the consumer goods. Those are some of the considerations that investors look at.
All right, I don't know. I'd like us to have the year-to-date sector performance displayed again and see what you have to say about that, looking at the fact that, I mean, we have the banking sector doing quite well there, and then we have some other sectors. I mean, looking at oil and gas and then industrial goods and looking at insurance. I'm particular about insurance because during the Q3 of 2024, insurance was doing quite well. What has happened? What has changed so far?
So, with the equities market, there's a lot of volatility and it tends to be cyclical. So we did see a lot of movement in insurance companies Q3, Q4. Even entering January, we still saw a lot of movement in insurance companies. And like I said, when there's that significant movement, there's going to be profit taking. So we saw pullback in the insurance sectors from, I think, about end of January into February. Some of those companies started pulling back. And the funny thing is, we've actually now started to see them picking back up as corporate actions are hitting the market. So for the insurance sector, we've already started to see prices appreciating again in ICO, Manzad, in even Sunu was slightly up in the last week. So it's cyclical, and we're likely to see recovery in the later parts of the year, depending on performance numbers. And we can't be too alarmed right now. A 2%, 4% decline. Some securities can reverse that in a day.
Absolutely. Now, let's take a look at the performance of Nigerian banks. I mean, whether you want to use any bank as an example, because that's what I want to do now. We see that while its market cap is 1.93 trillion naira as of last trading on Friday, its 2024 profit after tax is 1.03 trillion naira. That's about 50% of its valuation. Now, you can compare that to the price of banking stocks in other climes with valuations that are even, less than 11%. Is it the case that Nigerian banks are undervalued, or is the market not fully pricing their earnings?
There's a lot that can be said about the valuation of not just the banks, but equities in Nigeria generally. And with that conversation, you would have to look at other structural and market-specific things. So we don't have the same market depth. Our market isn't as deep as some of the international stock markets. So that's also one factor that definitely affects valuations. But for the banks specifically, and with their recent performance, considering that they had a good run in 2023 and 2024 on the back of the devaluation of the Naira, we actually have to wait and see whether they will be able to maintain those sort of numbers in the coming years, especially in light of their recapitalization exercises. A lot of these banks have said that they're expanding their operations and they are going to be investing a lot of the money that they raised to achieve some of those things. So we might not see the same performance numbers in the coming period. So that's something to watch. Of course, I feel like where the banks are also sort of a sweet spot right now, because with the market not being very deep, if the companies become very highly capitalized, it's also a challenge to see the same amount of volatility we see. But we'll have to just watch and see how their performance numbers are going to be going forward. It will be fantastic if they can keep churning out trillions, but we'll have to wait and see.
Absolutely, we keep waiting, and I hope so too. Now, irrespective of the bearish sector performance that we saw, I think some stocks still, I don't think, some stocks actually still maintain 3-digit year-to-date performance. I mean, whether you want to look at SCOA, which is number one with 116.99%, Chelaraps follows with 113%, Livestock 111%, NNFM 99.89%, Smallfit 95%. And for me, when you look at these stocks, about two of them are from industrial goods, you have two from consumer goods. I mean, that sort of looks good. Talk to us about this.
Okay, I mean, so it's an interesting observation, and one of the things we notice, especially with the stocks that are showing such impressive year-to-date returns. Sometimes these are stocks that liquidity is a problem, so you always have to look at trading volumes and values in those securities. Some of them don't have the same amount of liquidity as we see in perhaps the banking and some of the insurance sector. So you don't see as much movement in their prices. Sometimes when there is actually interest, that interest pushes the prices to new levels. But because there isn't sustained interest, we don't see as much movement in the prices as we see for other securities. But this is an interesting lift, especially livestock. We saw their financials coming out and they showed impressive numbers, and I think they've actually even declared dividend for the first time in quite some time. So with the companies that perform well, we always have to check and make sure that there's enough liquidity, because sometimes that positive movement is just because there isn't enough liquidity in those securities. And then sometimes we're seeing acquisitions or corporate actions being the factors behind some of those impressive movements.
All right, let's take a look at the list performance. Now, I'd love to ask you about SCOA, but I'll leave SCOA for now, especially looking at the fact that, I think it's just about 4.47 naira, and there are those who would tell you that, well, they don't really pay attention to some stocks if they are not, the high cap or the mid cap and all that. Now, let's go to the list performance. 3 of them were top performers by the end of 2024, but by Q1 2025, they are now in the top 5 decliners. What happened really? No strong enough fundamentals to support their prices? Is it profit-taking, market correction, or what exactly is the challenge? Unicell, we're looking at Unicell right there. You're saying Suno Assurances. Suno Assurances had over 800% in 2024. Now it's down 38.14%. And like you rightly said, at some point this month, last week actually, it came back 33%. That was just a week, a week retracing and all that. Africa Prudential 36.50. You have the list there. So I'd like you to comment on these.
Okay, so yes, these are actually very interesting. So, for example, MRS, we see news in the market, they are planning to delist. Owando, there's been a lot of negative sentiment around their financials. They're currently up to date with their financials, but there's still that sentiment of whether or not they're going to be able to keep on performing. And I think another interesting thing, so which sometimes is also why you see some price declines. So Owando did a bonus offer, and when a company offers a bonus, the price is adjusted. Same with Afriprud. Afriprud declared a dividend and a bonus. So Afriprud's price was also adjusted ex-div and post the qualification day. There was a price adjustment. So Afriprud Owando have price adjustments that pulled their prices from where they were post the qualification date. And then the rest, so Suno Assurance, yes, there was that massive movement in Q4, and of course profit taking, there was a pullback. Same with Unicell. When you see a company that is gaining 10-20% in a week or over several weeks, it's expected that there's going to be some kind of profit taking and some level of pullback. But like we always say, for long-term investors, if the company is fundamentally sound, over the long term, it's likely to recover.
Absolutely. Now let's move away from this. Let's talk about MRS. MRS has announced its delisting. Talk to us about that. How did you take that?
So actually, the news about MRS delisting has been in the market since last year. They actually did the initial publication, had their AGM and EGM. They had an emergency general meeting to get approval from their shareholders. So we've seen that in the works since last year. So initially, our consideration was, with the passing of the Petroleum Industry Act, perhaps there are new opportunities that the company feels it would be more able to take advantage of as on the OTC market. So what's actually happening is that MRS is moving from the NGX. So it's delisting from the NGX, but it's going to remain a public company. So it's going to list the shares on the NASD OTC. which will allow its shareholders to continue being able to freely trade the shares. The company mentioned in their publication that this decision was based on considerations of the regulatory compliance cost and just some of the regulatory hindrances to them to be able to take decisions and enter partnerships, which is understandable. You think that the requirements to list are a lot. There's actually a lot of post-listing requirements. So listed companies have a lot of requirements they have to comply with, which for some is a lot of cost. But one of the things that we're also considering is the fact that we've seen a lot of exchanges and regulators speaking about making a concerted effort to simplify the process and make things easier for some of these companies. So that's what we'll be looking at. Even for capital market operators, it's a regulated market, but there's often an over-regulation and just agencies and costs going up. We've seen a lot of that since last year. I think recently there was even back and forth with Financial Reporting Council. So these are all issues that listed companies have to deal with. And I think MRS is just a case in point. And they've made the decision that they believe they'll be more efficient being unlisted than being listed. But ultimately, it's a strategic decision at the purview of the company.
All right, Chinazom Izuora, I mean, I would have asked you more, but I think I should just end this with what you have said about some of the regulations and how so much work it is to remain listed. I hope that will be looked into and something will be done about that. Thank you so much, Chinazom Izuora, Senior Investment Broker, Parthian Securities, for your time and thoughts on the show today.
Thank you for having me. Have a good day.
You too.